I'm Peter Kavesi, and I'm the head of content at the Ottawa Business Journal. We're here at the National Arts Centre New Lantern Room today for the first episode of the Ottawa Real Estate Show, a new online broadcast dedicated to commercial real estate in Canada's capital. Today, we're going to be talking about Ottawa's investment market. Each year, roughly $1 billion worth of office towers, industrial bays, apartment buildings, and retail shops trade hands in this city alone. And last year was a big one, with one of the city's most well-known office complexes, Constitution Square on Albert Street, selling for $480 million, the largest single sale in the city's history. We're joined today by Nico Zentiel, a senior vice president and member of CBRE's national investment team. He was involved in the Constitution Square sale and will help us understand the significance of the transaction and explore what lies ahead in Ottawa's real estate market. We're going to get to Nico in just a moment. But first, we're going to speak with Ted Mann, the managing partner of Mann Lawyers here in Ottawa. Mann Lawyers is a full-service law firm and a sponsor of the Ottawa Real Estate Show. They have more than 30 lawyers and experts in all practice areas, including corporate, commercial litigation, employment and labor law, as well as real estate, among other areas. One of the issues they're helping their clients with are new changes to Ontario's land transfer tax. The provincial government recently introduced measures aimed at cooling the Southern Ontario real estate market. However, the moves also have implications for Ottawa. Earlier today, I asked Mann to explain these new changes.
The biggest change is that if you are a non-resident buying property in the Toronto area, you are going to be facing a 15% land transfer tax surcharge for purchasing property in the Toronto area. For buyers of Ottawa area property, for now, there is no extra tax. The changes happened suddenly over the period of a week, and Mann Lawyers was on top of those changes, had the necessary forms, and began readying their clients for these changes immediately. We do have clients buying property in Southern Ontario, and so we're very careful to ensure that they were aware of what these changes were. And in addition, of course, for our local clients, it's important because the same forms are required to be completed for us in Ottawa as are required to be completed in Southern Ontario. So we had to ensure that our clients knew that these questions would have to be answered and that they would have to confirm who the buyers were, whether they were residents or non-residents, regardless of whether the property is in Ottawa or Toronto. If you are a non-resident or planning to become a non-resident, then you should think about buying property now, particularly if you're buying in the Ottawa area, because we have no idea when the provincial government might decide it's time to tax non-resident buyers of Ottawa property as well.
That was Ted Mann, the managing partner of Mann Lawyers. Another supporter of the show is commercial real estate services firm CBRE. And I'm joined today by Sean Hamilton, the managing director of CBRE Ottawa. Sean, we appreciate your support and we're really looking forward to tapping into your insights today.
I'm excited to be here. It's an exciting time in Ottawa, so thanks for having me.
So Nico, let's start with you. You represented the vendors in this transaction, but before we get into the specifics, let's set the stage and establish a little bit of context. Can you tell us more about Constitution Square, starting about where exactly it's located?
Yeah, I think if you look at what it represents in the city or the context of the central business district specifically, it's on the western edge historically, but when you think about where that west is dragging, where you think about where that CBD is dragging, it's really dragging west. The likes of Zibi and what Mr. Ruddy's doing, as well as LeBreton Flats development. So, the way we position Constitution Square going forward is really a center ice location, which was historically at the western edge of the city CBD. But if you look at the asset itself, it's a full city block in the heart of the nation's capital, within a 7-minute walk from Parliament. It's over 1 million square feet. It's a top 3 building in downtown Ottawa. And so, in terms of asset positioning of the market and framing the opportunity really for prospective investors, that's where you're really honing in on.
Let's go a little bit further on that. Help us understand from an investor's perspective, why would a property like this be of interest to a commercial real estate investor?
It's a good question. I think, as we mentioned before, it's a top 3 asset. It's within 7 minutes from Parliament. You're within a 50, but it's really a 25-meter distance from the city's new LRT, which is coming on stream later this year. But also, if you look at the tenant profile, so you have approximately 50-50 investment grade tenancy, so call it government and or above, which would be we'd wrap in crown corporations into that mix as well as private sector tenancies. So not only are we attractive were we attractive, I should say, from a lease up standpoint in terms of occupancy, we were into the low 90s, but also the types of tenants in that building. So you're going to have your law firms, your top accounting firms, tech firms, as well as a significant presence by the federal government.
Okay.
If I could just interject also, you look at that building too, and it's got a timelessness to it. So it's a three-phase building where the first phase was built in the early 80s and the last phase was built, I believe, in around 2012, 2011, and the buildings are seamless. So there's a timelessness, there's a longevity. Really, as an investor looking at an asset for the future, it's bulletproof in terms of maintenance, in terms of keeping it current in whatever the market cycle is.
Just a quick edit on the last point, and the new owners will kill us if we don't say it. It's actually 2007 was the last tower that was.
Let's jump on that. Let's talk about some of the players who were involved in the transaction. Previously, it was a 50-50 ownership split between Oxford Properties, which is the real estate arm of the OMERS pension fund, as well as the Canada Pension Plan Investment Board. What was their motivation for bringing this property to market?
I think it's not dissimilar to what you're seeing. A lot of groups today is taking advantage of a solid market both on the debt and equity front. So I think from their perspective, they really like the real estate. They had a really good run with it. Sure, it was an opportune time to sell, but it's really about the reinvestment and recycling of the capital. So they had identified other markets, other international markets, other domestic markets that they felt they could recycle that capital and generate additional returns on.
Ultimately, it's also a testament to the strength of the Ottawa market and maybe the fact that other markets internationally and nationally are becoming overpriced. So the likes of New York, London, Paris, Toronto, Vancouver are becoming more and more expensive. And so now investors are looking at quality assets in secondary markets. And this represented really a coming of age for Ottawa, whereby we've got the same cachet as a Toronto, but at a more affordable price.
I think it's a good point on relative value, which is how we try to position a lot of assets in Ottawa, which is when you think about what New York and London did to Toronto and Vancouver, you could very much think that the same thing could happen in Ottawa. So Vancouver and Toronto, as groups start to get outpriced or priced out of those markets, all of a sudden you can move to a market like Ottawa, still have a very, call it, very healthy and aggressive return for the vendors, but from a relative value standpoint, there's a bit of a premium relative to markets like Vancouver and Toronto. And so it's becoming a lot more of an attractive market on that rationale.
So you say that Ottawa is becoming a much more attractive market. As you were taking this listing to market, what sort of interest were you getting from prospective suitors or buyers?
Yeah, I think I think you have to look at it in the Canadian context as a whole. So not only did it represent a significant sale in the Ottawa market, but in the Canadian context, a deal of that size, magnitude, and profile is going to be significant. And so, admittedly, we had interest from obviously domestic capital within Canada, but also foreign capital interests. So, I think we like to say, it was the elite investors, in that sphere that can, do a deal that big, that have the resources they can pull together within the time they need to. And so I think, on the capital front, it was really a wide cross-section of both foreign as well as domestic capital.
And we've seen that in other asset offerings as well. It's not just a one-hit wonders. There has been interest in the city for quality assets over the course of the last 18 to 24 months. So again, it's more a testament. It's two things: a quality offering, but a city that has strong fundamentals that is attractive to the investment community.
So the successful bid was put together by three firms. We had Greystone Managed Investment, Canderel, as well as Canstone Realty Advisors. Can you tell us who are these firms? What sort of presence and history do they have in the Ottawa market?
Yeah, so maybe we can just start with Greystone. So Greystone, again, would be a top domestic investor in Canada in the billions in terms of assets under management, would represent some of the strongest office buying capital in the entire country. Forgestone's a relatively new entity, called within the last 5 years, but have gained a lot of steam. This would be their first significant foray into Ottawa. And then Canderel, and maybe I can just let Sean touch upon kind of the historical nature of Canderel, but again, very significant national player, but also very significant Ottawa player, roots being in Montreal, and then transferring that skill set to Ottawa. So they've actually come full circle as it relates to this complex specifically.
And Canderel, Montreal-based developer with heavy roots in Ottawa over the course of the last 20-odd years. So many people new to the real estate industry might not have heard Canderel or might have heard of them only in as much as they were one of the proponents bidding for the LeBreton site. But the reality was they have a long history. They originally developed the first 2 towers of Constitution Square, and they were one of the proponents that was responsible for the growth of the Canada North Business Park, and were a primary developer for Nortel, amongst others, but Nortel was one of their main tenants, as well as Cisco Systems and Entrust Technologies. So much of what we see in Canada North is attributable to Jonathan Wiener and the Canderel team. So it's sort of a homecoming for that group.
It does sound like we're sort of bringing it full circle with this transaction. So, of course, we mentioned the purchase price, $480 million. That's a very, very, very big number, and for the Ottawa market, it was a record-setting figure for a single building transaction. Of course, one of the most common ways of measuring these sorts of transactions is with something known as the capitalization rate. Sean, is there any chance you can just give us a quick refresher on what a cap rate measures in commercial real estate?
Yeah, the easiest way to put it is the cap rate measures a return. So for every dollar output by a purchaser, there's an expected return. So if you're looking at a 10% cap rate and you invest $100, then you're looking to get a return of $10. Now, generally, a cap rate is also an indicator of risk. So the lower the cap rate, the more certain somebody is on the return that an investment is going to yield. So a lower cap rate is a sign of confidence in an asset and in a marketplace, and a higher cap rate might be more indication that there is risk or that there is uncertainty. So at its shortest, it is just a measure of return.
And Nico, in the case of Constitution Square, how would you describe the cap rate associated with this transaction?
I mean, it's certainly by Ottawa standards, it set a new high water mark in terms of benchmark yields. So, historically, I don't think we've seen a cap rate as low. Unfortunately, we can't get into the specifics of what that was, but safe to say, on a going-in basis, we were a sub 5, but obviously that grows over time, and so. I would just add one more comment to the cap rate, which is, in the context of a large asset like this, it's not only the cap rate that's the main driver. So there are other returns, total returns, price per square foot, growth rates, and so on and so forth that all play into kind of the recipe, to kind of make the investment work.
But a lower cap rate in this, to sort of summarize, quality of the asset, quality of the tenant mix, quality of the fundamentals of the city. So if a lower cap rate is essentially as close as we get in the investment world to looking into the future, and the lower the cap rate, the more certain people are, the more confident they are that the future is positive.
And I think, again, just to cap that off, it was in response to a pretty unique asset sale that we saw come to market that historically, certainly in my lifetime in real estate, I don't think we've seen something of that quality and scale and profile come to market. And so correspondingly, it makes sense that that cap rate is going to be lower.
So just to look a little bit beyond Constitution Square, the timing of this show is perfect because CBRE just came out with its year in review report on Ottawa's commercial real estate market. The headline figure was that we hit a 5-year high here in Ottawa with $2 billion in transactions. Again, beyond Constitution Square, what was driving all that activity last year?
I think you saw a number of things happen. So I think from a total sales volume, definitely we were there, but also the number and types, the number of high-profile sales we saw come to market. So not only was Constitution Square a big driver of that, representing about 25% of that number. So if you can imagine that didn't come, we wouldn't quite be at that level. But we traded out Minto Place, a 50% interest in Minto Place last year as well. So that was about approximately $200 million deal. And so you start to add up these larger sales, and it can get to that $2 billion number pretty quickly. So I think it was a combination of groups that had the same motivation. Some of it was estate planning, some of it was recycling of capital, some of it was just doing a trading up in terms of quality of the assets. And so we saw a number of high-profile deals come to market, and I think it was a combination of the time in the market as well as the types of deals that surfaced in the market.
And if you look at the various asset classes that traded, it wasn't land, it wasn't multi-res that necessarily increased dramatically to drive that number from an average of $1 billion to $2 billion. $2 billion, it was primarily the office sector that grew to hit that $2 billion number. So again, just to show the strength of the market and the depth of the market, you take away the Constitution Square sale, which arguably some could say is a once-in-a-generation business transaction, we're still at a high watermark for Ottawa. So again, testament to the fact that Ottawa and its office market and the products we're offering here are strong and attractive drivers for the investment market.
So then just to close, I was wondering if I can get both of you just to give me your forecast for 2018. What are we going to see in the coming months when it comes to the city's investment market?
And maybe I can just start, and Sean can add. I think 2017 was a banner year, both on our book of business as well as I think what we've seen in the city. What's in a very pleasant way surprising is how quick of a start we've had in 2018, and so I think our feeling is 2018 is definitely going to be another big year. It's going to be a continuation of 2017. When we look at our first quarter results in terms of total activity, deals that we have closed, under contract, and firm, again, year over year, we're ahead right now. So, 6 months from now, where are we going to be? We don't know, but we feel 2018 is going to be a big year.
Sean, how about you? What's your take on what 2018 has in store for the city's investment market?
We're still really bullish on the investment climate for 2018. I mean, last year we saw $2 billion, and this year we're pulling back that number a little bit to about 1.5 to 1.7. That's not really us figuring that it's a downturn in the market. It's a testament to how strong last year was at $2 billion. So overall, at 1.5 to 1.7, we're still forecasting growth and a high level of turnover. What's exciting for us is the fact that we're seeing new blood come into the city, and we're seeing different owners and new owners who will bring their own ideas and their own experiences to the city and the landlord community. And not that there's anything wrong with our community, but certainly we can always learn from new ideas. And as we experience a rate of change in Ottawa, as the government declines slightly and we're seeing the rise of an urban tech community in our downtown core, it'll be really interesting to see how new landlords adjust and harness their resources to appeal to this growing sector in our downtown core. So overall, I think success will beget success, and we will see new landlords with new ideas that will ultimately help growth in our downtown core. So we're bullish.
Nico, Sean, thank you so much for joining us and being here for the first episode of the Ottawa Real Estate Show. And as well, thank you very much to our other sponsor, Mann Lawyers, as well as the National Arts Centre for hosting us here in the beautiful Lantern Room. If you're watching this on Facebook or YouTube, you should check us out on obj.ca. We publish local stories every day about real estate, tech, tourism, and other Ottawa business news. We have a free daily e-newsletter that you should sign up for. And we also do some really cool digital and content marketing for a lot of awesome businesses and organizations here in Ottawa. So check us out, obj.ca. I'm Peter Cavesi from the Ottawa Business Journal. Thank you very much for watching, and we'll see you again in a few weeks.